Yo, hi dear viewers and subscribers of this channel, and today we will talk to you about the concept of smart money, and at the end of the video I will talk about whether it's worth trading on it or not. So, what is smart money? The smart money concept got its name due to the fact what this offer is familiar with the classical terminology used in financial markets. According to it, smart money refers to funds of hedge funds, pension funds, and similar large players which are managed by professionals. The creator of the system is famous modern trader Michael Huddleston. Many know him under the nickname Inner Circle Trader, ICT. Ardent supporter of the conspiracy theory of the markets and is convinced of the smart money acting as the main market makers. He's consistently hunting for funds of small retail traders and larger players who are not involved in determining assets price. He sees the main idea of his concept in each trader understanding the actions of smart money representatives and making trading decisions allow him to play not against them with money, but in unison with them earning. So on smart money, use patterns such as imbalance and order block. For example, what is imbalance or FVG? An imbalance shows an uneven price distribution on the chart where funds had less the price and will return to this range to build up their position and let price go in the opposite direction. FVG is used as one of the factors for entering a trade, and the order block is the area where the smart money capital has not closed its losing positions and must return the price there to gain new positions and release the price.
Also in smart money, as well as in our trading concepts, the trend, or in smart money structure, and liquidity is taken into account. So let's talk about the smart money strategy and basic content.
The core smart money system is based on several statements. The first, the concept of market structure with bullish and bearish trend, consolidations, or range trading. To determine trends, classical methods formulated by Charles Dow are used. Successively rising highs and lows are formed on bullish trends, and successfully falling highs and lows are formed on bearish trends. The overlap of the next low of the previous one in a bull market or the next high of the previous one in a bear market is considered as a break in structure or transition into a range. The second one, explanation of liquidity as a market driver. Participation of trading participants or when smart money as liquidity providers. Interpretation of support or resistance levels as liquidity levels. Finding zones of its accumulation behind support resistance levels where traders place stop orders. Buy stop and sell stop to enter the market on a breakdown. Stop loss for protection when trading on rebounds. Behavior of smart money who hunt for this very liquidity to accumulate or allocate their own position in flat. First, justification of the necessity and usefulness of marking liquidity levels on the time frames. Highlighting the market structure on the senior time frames to determine the direction of trading on the junior ones. The concept of gaps in smart money were called imbalance, as marking inefficiency, principles and probability of their working out. And the last one, description of several patterns such as break of structure or change of character into shift, order block based on a bullish and bearish engulfments, and being the main combination for finding a market entry point. Now we will talk about smart money system advantages and disadvantages. There is a heated discussion about smart money concept in the community, traders and investors. The statements of its opponents are based on three main judgments. The theory what ICT used for the smart money concept is there is no recorded evidence in financial markets trading. What the situation and patterns considered in smart money are a direct synchronous of smart money manipulation. Moreover, most of them were described by the classics of trading and investing in the times when there were no small retail participants in the market. Nevertheless, all these principles worked perfectly well 100 years ago and continue to work today. Besides, on the same American stock market, the total funds of retail participants do not each even 20% of the total volume. This makes them not such a desirable target for hunting by smart money, as the offer of the concept tries to present. Perhaps until the opposite is also proven. Smart money explains how large players behave in the market and influence price. However, it does not offer the possibility to trade like smart money. The system offers to follow them, which can actually bring profit. This is confirmed by the statement of Michael Huddleston himself, what the strategy does not give even 90% of profitable trades, while, according to his own words, smart money will always turn out to be a winner. Besides, there are many simple TSS in trading practice, what relies this approach of following the market. Traders who want to get a stable income only need to familiarize themselves and follow rules. The system is really viable, but it cannot claim a brilliant discovery in trading on financial markets. Combining well-known principles and new names for well-known levels, the patterns are not unique innovation. For which, who want to learn smart money should pay fabulous money. The above does not mean that there is no rational and useful content in smart money. Traders familiar with the concept note several positive aspects of it. No indicator is needed to trade the system. The trader gets used to analyzing the smart state only by pressing chart, which significantly speeds up decision making and, in the end, allows to get more profit. The algorithm has a logical sequence, what allows you to understand at any moment what is happening with the price, and what are likely scenarios for the development of the situation. Smart money includes a lot of price action, which brings stable income to many traders. However, price action is more comprehensive, multifaceted and difficult to learn. Understanding even a part of it in the new wrapper of the smart money concept will be undoubtedly give traders effective tools for working in the market. With the right approach to capital and risk management, even 60% probability of profitable trades brings the trader a stable income on the distance. In this case, smart money concept as theory of actions of big players against small participants on the financial markets doesn't seem to be sound. Nevertheless, as a trading system, it's quite acceptable, because it uses time-tested principles built on the very basis of complete algorithms and allows traders to get stable profits. Now, I read to you information from internet about smart money. I don't know, I think stupid people write it, and now my opinion. Smart money is an absolutely working strategy which allows profitable trading on the distance. I call it logical technical analysis, where chart analysis is not based on ordinary drawings, but it is supported by logic. Smart money allows you to open the most profitable trades and have a high win rate, and the risk of deals is always controlled. Entry and exit point can be easily identified on the chart, which is also a plus. Examples of my trades on this concept you can see on my YouTube and Telegram channel. Follow to my Telegram by the link in the comments. So see you later and bye.